What up, people? How's everybody today? Happy Wednesday. I'm Kamari Ellis. Welcome to the Finance Rebel Show. I'm on a bit late today. Got some good news, though. Got some good news I'll be sharing with y'all shortly. But I'm on a bit late today. Got some new tech. Everybody on IG may not be able to see it, but my folks on Facebook and my people on, not Instagram, my folks on Facebook and my folks on YouTube should be able to see it. So as everybody comes in, just give me 1 second just to get everything going, getting it right. Hey, Angela, how you doing? Welcome. Happy Wednesday. Let me share this out to a couple places where folks might appreciate it. Let's see here. So, all right, y'all, it's almost Father's Day. Hopefully y'all got y'all Father's Day stuff together. Y'all gonna treat y'all daddies, y'all bobbers, y'all abus good. You know, dads matter. Dads matter. Matter of fact, I think I'm gonna pull up some of the stats. Let's see here. I'm really interested to see how much money people spend on Father's Day. We know Father's Day loses every year to Mother's Day, loses every year to Christmas. It even loses to Halloween. But give me a second, we're going to jump into it. Give me 1 second. If I could spell right, so I could share this right, we will be all good. Give me 1 second. While y'all waiting, feel free to share this out with a friend or two or three. Righty, got that. All right, let's see where else. Gotta share this real quick. So how's everybody doing? Everybody come on in and check in. I see Don Johnson's in the building. Yeah, Don, you letting the streets know. I was about to share the good news with everybody, but you kind of beat me to it, but that's all good. Yes. Well, you know what? Give me a minute because I want to be fully focused when I deliver this message. Give me 1 second. This is what I get for coming on late. I'm ready to go, but I didn't get a chance to set this up the way I normally would. So give me 1 second, y'all. All right, let's get busy. All right, so listen, everybody. Again, welcome. It's Wealthy Wednesdays. I'm Kamari Ellis, your host. Every week we come here, we talk about money. The whole purpose of the Finance Rebel Show is to help increase the financial IQs of those that are in the Black community first and foremost. We have the hardest money problems, so I want to lend a hand to help solve some of those money problems. All right, so good news for the day. I was ranked in the top 20 of all Black Wealth podcasts. There's 55. There was 55 Black Wealth podcasts ranked. I was number 11. And there's some heavy hitters in the building. Folks like EYL, the Black by the Hood. You know what? Let me do this. I'm going to pull the list up real quick. Let me pull the list up and share it with everybody real quick so we can talk about this so I can give shout outs to all those other folks. Yep. So, but y'all know I'm a perfectionist. So the goal, I'm number 11. I need to be number 10. By the Hood, my brothers over there, Jimmy and Corey, are number 10. So either I got to knock them out the box or I got to find somebody else to knock out the box. Ideally, I'd rather knock somebody else out the box. But listen, I'm coming. I'm coming. Either way, I'm coming. So that made my day. That made my day. Let's see here. I know a couple people shared it. I know Jimmy shared it. So let me find it real fast for y'all. Give me 1 second. So the top 55 Black Wealth and Investing podcast. So I am number 11. So I'm proud of myself, y'all. I'll be honest. Some days I wonder if anybody's listening. Some days I wonder if this helps anybody. Some days I wonder, what's the point of it all? Just being honest, just being transparent. But then every once in a while, somebody will drop me a line, send me a text, shoot me an email, and they'll say, yo, this helped me. This helped me out a lot. And I am definitely appreciative for this, because all of this comes from a desire to see our community in a better position, in a better state. All right. So this, I don't even know how this came about, but this came up on blog.feedspot.com. All right. So this is the top. This one here says top 50 Black Wealth and Investing podcasts to follow in 2021. Number 1. Now, I am honored to be on a list with this lady. She is probably my favorite financial educator that's running around out here on these social media streets. So Miss Tiffany Aliche, the Budgetnista, she's number 1, Brown Ambition. It's a great podcast. I've listened to it several times. I enjoy it. All right, number 2 is To His and Her Money Show. I haven't listened to it. I will be listening now. I will definitely be checking it out. Number 3 is Journey to Launch. I've listened to that a few times. It's a dope show. Definitely a dope show. All right. Number 4, Earn Your Leisure, also known as EYL. All right. So that's a great show on there. They do awesome stuff. Great interviews they do. Their market monies are really good. And I'm going to say this. I don't usually say this, but Ian Dunlap, I believe his name is, the Master Investor. I actually enjoy a lot of his commentary because it appears that he goes through a lot of the same process that I went through when I was institutional. So I definitely enjoy his commentary on investing. Paychecks and Balances. Now, Paychecks and Balances, I believe me and Rich Jones are actually Facebook friends. That show is pretty dope too. Actually, Courtney Richardson, the Ivy Investor, was just on that show like last week. So she's out here killing it too, because she's been on a bunch of these shows. All right. Number 6, The Black Wealth Renaissance. I don't know if I've listened to that one. I know I see it. I know they're definitely popping on Instagram. I know they definitely got some things going over there. Again, I'm definitely going to check that one out as well. All right, that's number 6. Number 7 is Tweet Talk, the Black Wealth Podcast. Okay, Tweet Talk, the Black Wealth Podcast. I haven't listened to that one. All right, number 8, Black Married and Debt Free. I haven't listened to that one either. Definitely go check that out. It looks dope. Anytime you're black and married, right? We got black love right there, and you're debt free. Man, that's a perfect combination right there. So can't be mad at that one. All right. Number 9 is The Clever Girl Knows Podcast. I haven't heard that one either, but again, I'll be checking that one out. Number 10, By the Hood, right? So y'all know that's my fam over there, Corey and Jimmy. They probably will be over to besmirch my name at some point before the night's out, as they always do, all in love, all in fun. But without ado, there's the Finance Rebel Show. All right, so they list me out there. I'm number 11, the Finance Rebel Show. So listen, I'm number 11 right now. I need to be in that top 10 spot. So I got to figure out how to make my show better. So if y'all have not listened to the Finance Rebel Show, all you got to do is Google the Finance Rebel Show and go leave me a listen, right? Listen to the show and then leave me a rating and review. All right. All those reviews definitely matter. They definitely help. All right. So I'm only going to do the top 20. I don't want to spend all night going through the whole list, but I'm going to put the list in the chat so everybody can check it out. And check these shows out, y'all. Black creators matter. Black wealth creators matter a whole lot. All right. So this one, number 12, is the Abundant Culture Podcast. Again, the Abundant Culture Podcast. Never heard of that one before. It says it's about portfolio management and the value of business. Okay. Two black guys with good credit. That's a funny title. That's cool. I'm definitely gonna check that out. Minority Money. That sounds interesting. So it's about finance, family, fitness, and health and education. All right, so that's number 14. Number 15, the Money, Markets, and Mindset Podcast. All right, definitely have to check that out. Oh, that's by Jason Brown. I know who Jason Brown is. He's really big in the option space. Redefining Wealth with Patrice Washington. Wow. Now, Patrice Washington is buzzing out here on these streets. Haven't heard her podcast, but I'm honored. Again, I'm honored that I got such a high ranking. All right, Black Millennial Money. Again, Black Millennial Money. Haven't heard that one before, but definitely I'm gonna check out all these. Black Wealth Media. Okay. The Table with Anthony O'Neill. Wow, I didn't get this far down. Now, if y'all follow Dave Ramsey at all, Anthony O'Neill's on with Dave Ramsey. Anthony O'Neill actually has a pretty big YouTube following as well. So that's pretty cool. I don't know how they got their rankings, how they tabulated the rankings, but hey, I'll take it. Afroeconomics with JB Bryan. Okay, this is another one I've never heard of before, but I'll definitely check it out. I'm gonna check out all of these, y'all. I encourage you all to check them all out as well. Listen, this Black wealth thing is a real thing. We definitely have to be about our money. We definitely have to be about our culture. We definitely have to be about our character as well. All of it matters. All of it matters when we're talking about uplifting the Black community and putting the Black community at par or better than other communities. So I think it's really important. And again, I'm honored. I'm honored that I'm on the list. So that's pretty cool. That's pretty cool. All right. So listen, y'all know it's Wealthy Wednesdays. I know I'm late, but I'm here. What questions do y'all have? What money questions do you have? What tax questions do y'all have? All right. What stock questions do y'all have? Y'all know I cover it all because I worked in all of those different disciplines inside of the financial services sector. All right. So, oh man, Alan is on. My man Algernon, how you doing, sir? Hooked on Kim. Hey Kim, how you doing? Welcome. Let's see who else has joined in. I know a few other people have joined in. So I know Angela was here. Don Johnson's here. Yep. Top 50 podcasts in these streets. Yep. I'll take it. What's up, Jose? Yep. Top 20. So what should the next goal, y'all? What should the next goal be, y'all? What should the next goal be? Right? Should I be aiming for top 10 or top 5 or number 1? A lot of stiff competition. Like I said, I'm honored just to be on the list. Hey, Ladina, how you doing? Happy Wednesday to you as well. What's up, Dwight? What's up, bro? How you doing? All right. Happy Wednesday. Hey, Katisa, how you doing? Congratulations on my recognition. Well deserved. Thank you. I'm just over here beaming. We are listening. It does help. All right. I appreciate that. D. Charles says that over on YouTube. Green Park. What's up, bro? My Bobcat brother right there. All right. Angela says congratulations. All right. I appreciate the congratulations. Yep. The whole list is dope. The whole list is dope. How did they miss the come up series? You know what, D Charles? I like the come up series. I like what what's his name? Because he's got a sister on there named Kamari. What is his name? What's the brother's name on the come up series? And listen, the come up series, but you know what? I don't know if they're officially a podcast. I know they have a YouTube channel, but I don't know if they're technically a podcast, right? Because if you're an old podcaster like me, because I started podcasting probably like 2011, podcasts were only audio. Now the term has kind of changed to be audio and video. I still say you can't fully be a podcast if you don't have the audio function. You can have the video, but you gotta have both. But again, that's just me. But yes, the come up series is dope. If you ever check out the come up series room, they got the cousins. Like, that's a strong tribe over there. Strong tribe. Okay, you got a question about EIDL loans? Economic Injury Disaster Loans. That's what EIDL stands for. Yes, thank you. Mark Monroe. That's a dope brother right there. I like how they do it. One of the things I really appreciate about the Come Up Show is that they're always doing Black History facts. If y'all been rocking with me for a while, y'all know I feel some kind of way about my Black history. Not just Black history in the United States, but Black history throughout the whole African diaspora. I rock with it all. It's all important because our history didn't just start here on the land of the United States. It started way before that. And actually, we were here before everybody else as well. So I'm with it all. All right. Hey, Angela. How you doing? Welcome. All right. Don came to the rescue, told me it was Mark. Oh, you're in the Discord. Okay. I'm not in the Discord. I haven't figured out Discord yet. A couple people actually suggested I do one. I haven't figured it out yet. There's too many platforms, y'all, to try to figure out and be effective and also get some work done. I've had to hire a whole team to take over or something. All right, so Reem's here and Moni the Chicos is there. Moni, if I said your name wrong, I'm sorry. Charge it to my head, not my heart. Okay, so we got a question. Listen, so everybody throw their questions in the chat. If you're on IG, throw your questions on the little question mark box. Y'all might be seeing a little difference in my video tonight. I'm seeing it bouncing up and down because I'm working on getting some new equipment. So like I told y'all, trying to take the show up a couple notches, right? Deliver more quality to everybody. All right, so Karam773 asks, for real estate, should I start my LLC /PA now or wait? I haven't sold anything yet. So this is an interesting question. All right, so I'm going to read the question again just to make sure everybody's got it. For real estate, should I start my LLC /PA? Now, LLC stands for Limited Liability Company. Usually PA is the designation for professional. It's like if you're a doctor, engineer, they start PAs. I'm not sure what state you're in, so it might be different in your state. So should you start it now or should you wait? I haven't sold anything yet, but here's the missing part. Have you brought anything yet? So are we just asking in the pre-phase of beginning to invest? Do you plan on being a renter or a real estate investor /flipper, right? Which side of the house are you going to be on? Are you going to do both? Now I'm going to give you what I believe you're asking, and you can step in and correct me if I am wrong. So it sounds like you're brand new, haven't gotten into the space yet, looking at it strongly and about to make your move. Cool. Kudos to you. Congratulations. What I normally suggest to new real estate investors is not to do an LLC. A lot of people will tell you do an LLC. Typically, they're wrong. Now, I don't know what your position is in life. What I mean by that is, I don't know if you already have assets. I don't know if you already have experience. I don't know anything about you. So I'm going to take it from the standpoint that you don't have any assets. This is your first venture into investing. And so I'm starting from the most basic level ever. Again, correct me if I'm wrong. But I tell people to buy it in your name. That's going to be the place where you're going to get the most leverage in terms of getting lending, right? Unless you're buying all cash, you're sitting on a whole heap of cash. You're going to get more leverage by getting a mortgage and getting into the space. All right, that's number one. Number two, again, the property needs to be in your name in order to take advantage of that. Number three, lending gets a little squirrely when we start talking about owning property in entities. Yes, it can be done. I have clients that do it. All right, but it's a process. It's not for the faint at heart. And again, it's a whole process. The other thing you need to have is a track record. So again, let me back up to LLCs. What are they for? They don't give you any tax benefits. None. Everybody that's running around talking about LLCs, because in this scenario that you painted for me is just you. So I'm going to assume you are a solo LLC, or what's called a single member LLC, and your tax treatment will be the same as anybody else who's running a property that has it in their name. All right. So I don't see that it's any benefit to you. Let me see if you said anything else. Okay, you have your license. So I'm assuming you're talking about your real estate license. Okay, that's cool. You have your real estate license. Are you an investor though? They're two different things. Selling homes to people, marketing homes to things is one thing. Selling homes or totally investing is another. Shout out to my man Algernon, who's on there. Alan, how do you have your name spelled? Al Allen sells homes. Al Allen sells homes. So I know he's a realtor and he's an investor, right? I'm sure he could tell you way more about it than I am by doing both. But I do think you should do both, right? Because you have access to the MLS. You get to see things. You're always out in these streets. So you can leverage your time when you're selling homes by doing your due diligence to also find investment properties. But if I'm trying to see if you said anything else. Shout out to Janelle Wilson, who's on as well. Oh, so Janelle, you're a realtor as well? I just thought you were an investor. Okay. So yeah, I like Janelle. She's always making moves. Her listen, her IG be popping. I'm not that fancy, y'all. I'm not that creative. I sit and talk to y'all. And since I'm a nerd, I can give you the facts. But she be creative and doing a TikTok point thingy, and I can't do it because I can never figure out where the hell to point. But enough about me and my shortcomings on social media. But again, to answer your question, normally, again, as a beginner, I wouldn't do an LLC. There's no tax benefits, right, for you from the start. It's going to add another layer of complexity for you. That's number two. Number three, you should be thinking about getting plenty of liability and or umbrella insurance. Talk to a property and casualty lawyer for that, though. Because insurance, in my opinion, in this instance, is more important than entity protection. Entity protection typically is for protection in the courts, any liability protection. But you still can get sued. And what I just learned, because Courtney and I just did a course for real estate investors, what they need to know about taxes. Everybody check out unlockingthetaxcode.com. Is that in Pennsylvania, if you are registered as an LLC, you then have to pay a lawyer to represent you if you have to go to court. You yourself as an individual cannot go to court for yourself. You have to hire a lawyer. That's not me saying that. That's the Ivy investor, Courtney Richardson, who is a tax and real estate attorney. So, and like I mentioned, also the financing hurdle it presents can be a bit challenging for a new investor. So, all right, I know somebody asked about EIDL loans. So Angela asked about EIDL loans. Angela, what question do you have about them now? What are they? EIDL loans are loans that the SBA gave out. Actually, they gave out a lot during COVID, after COVID, because of the bills, but they've been around for a while. So again, EIDL stands for Economic Injury Disaster Loans. And they usually would give those loans to people in hard-hit areas, and to people in hard-hit areas that might have had a catastrophic event, tornado, hurricane, earthquake, things like that. All right, let's see what else we got. Have you been watching You Won the Last Days? My pick is moving. Oh, okay. So Jose is talking about Urban One. No, I haven't been watching Urban One, but hey, why not look at it now? Why not look at it now? Hold on, I never put this in the chat. I'm moving too fast, y'all. I'm moving way too fast. Give me 1 second. So make sure y'all check out this article that highlights all, or not all, a lot of the Black Wealth podcasts that are out there. All right, so give me 1 second. We're going to pull up Urban One. Look and see what Jose is excited about. He must be making some money off this. Jose, he's a slick one. He always asks me about the stuff he's making money on. All right, You Won. Pulling that up on the screen now. Listen, as we're waiting, remember, if you're just joining in, this is the Finance Rebel Show. I am Kamari Ellis. Every Wednesday, we do Wealthy Wednesdays, where I answer your money questions live. I don't care if they're about taxes, stocks. We're just talking about real estate. I've been in the financial services arena for over 25 years. Started out doing taxes. Was a financial advisor. Was a Wall Street portfolio manager, meaning that I bought and sold stocks and bonds for client accounts. And what I love to do is really come here and share all this with you all, so we can take it back, study up more, right? Study up more, so we can all build up our wealth and our financial IQ, which goes hand in hand. You can't have one without the other. Now, I'm looking at this chart that Jose just talked about, and woo-wee, $17. I know Jose came on my show, and we talked about all the Black run stock companies, or all the Black owned stock companies. And I want to say that was, I don't know, somewhere between now and May. And this sucker was about $5. So I'm guessing this latest jump is courtesy of, I need a drum roll machine. This new jump is courtesy of the Reddit crew. I mean, that's a pretty big jump. That's an over 300% return, just looking at it eyeball to eyeball. I wouldn't buy it. Remember, this show is really geared towards the basics. All right, this show is really geared towards those who are just getting in, those that are getting in to the business, well, not the business, but getting in, trying to figure out what they want to do in terms of wealth accumulation, wealth management, wealth distribution, and wealth transfer. Right, this is for the basics. Even though I've worked at the highest levels of finance, I think I'm best served at the basic level. So I don't talk a whole lot about trading. This could be a potential for trading, but I'm not going to promote that here. I'm just talking out loud. Okay, so Janelle came in. I'll come back to you, Janelle, in a minute. All right. And you asked about escort benefits. All right. Give me 1 second. I'll come back to you. So, U1 is cool. Again, that's Urban One, started by the legendary Kathy Hughes. I wouldn't touch this stock. I wouldn't buy this stock with y'all money. I might trade it though. But like I said, I don't really talk about trading that much here because I feel trading is more intermediate/advanced topic. All right. All right, folks, continue to throw your questions in the chat. So I want to come back and address a couple of things here. Oh, okay. So the virtual advisor's on. Welcome, welcome, welcome. Janelle says she buys with an LLC. I got it. So Janelle says using LLC to buy properties is for asset protection. Absolutely. It's for asset protection, but it's also for liability protection and as it relates to the legal system. So he says buy properties for asset protection, but you would also have insurance. Yeah, but all right, let me keep reading the rest. I'll come back real quick. The insurance company hires the attorneys. Yes, they call that subrogation. All right, so again, he says it's still getting his feet wet. All right, he says, you're welcome. I think I'm going to post a reel about commercial loans. Okay, cool. Cool. So you can do it. Janelle, I'm assuming you're more of an advanced, at least intermediate to advanced investor. You've been doing it for a while. You have multiple properties. Again, for an individual that's brand new to it, I wouldn't do both. Why wouldn't I recommend both? Because I've seen people jack it up. So when I say things to y'all, it's not about what I've done or what I've seen one people done. I kind of aggregate everything and what normally happens, what's the average of what people should look for. So for a person who's got one property and that really hasn't gotten in and hasn't gotten their feet wet and don't know if they really, really want to do it, by the way, that's no shade to you, Karan. I'm just speaking from the experiences that I have. I wouldn't have you get an LLC because I've seen people get LLCs, say before they buy a property, before they even get started, change their minds. And now guess what? They have to dissolve. They got to dissolve, right? Tear down, break down the LLC that they just spent all this money for getting it. Now listen, in Pennsylvania, to set up an LLC is $125 plus whatever the advertising cost is. Because you're supposed to advertise anytime you set up an entity. All right, but it's $125. Like there's some sites out here that charge you $300, $400, $500, and then like to upsell you on some things. And to me, it's a total ripoff. However, I would talk to a lawyer. I am not a lawyer. I'm just an enrolled agent. All right. I would talk to a lawyer. But again, I like to remind people about this. I used to manage about 50 doors. I've had real estate, sold real estate. I'm not a rookie to it, but I would never claim expert status in it either. But again, like I said, get your first piece, see if you actually like it. Then you can always change course later. That's what I would suggest. All right, D-Lights 15, welcome, welcome, welcome. Dion TC, how are you? LDF 910, how are you? All right. Kitchen CJ 32, how are you? Welcome, welcome, welcome. All right, so what other questions do we have, y'all? What other questions do we have? So listen, I was looking up something, right, as folks are coming in. I'm not going to stay on too long, right? But as folks are coming in, I was perusing the interwebs because y'all know Sunday is a big day, right? It's probably the most important day of the year. It's Father's Day. I'm a father, right? Of course, I think it's the most important day of the year. But the numbers disagree with me. So since the numbers disagree with me, I figured, well, let's look at these numbers. Let's talk about it. Because dad, D. Charles trying to put some puts. Yeah. So I know I just said I focus on the basics, right? So puts he's talking about options, right? So a call is the opportunity to buy a stock at a certain price. A put is the opportunity to sell a stock at a certain price. So you typically want to buy calls when you are bullish on a stock, when you believe a stock is going to increase in value. You want to buy puts on a stock when you believe the stock is going to go down in value. So that's all cool. That's all cool. That's intermediate stuff. I mean, I think it's stuff people should start to get to know, start to understand the lingo, start to study it. But I'm a firm believer of getting to know the market first, then venture out and do some of the sexy stuff. None of it's rocket science, though, y'all. I hope y'all don't take that away from what I'm saying. None of it's rocket science. Right. But now, remember, folks, everything I say here is for entertainment and educational purposes only. Please don't say Kamari told you to buy or sell something. If you feel the need to buy or sell a security based off of what you heard or saw on this show, please talk to an investment and or tax/legal advisor before you do any investing of any kind. All right, so back to what I was talking about, Father's Day. Father's Day gets a bad rap. Can anybody tell me why do we spend more money on Mother's Day than on Father's Day? Help me out, y'all. I'm trying to understand this. Why do dads get treated so poorly? Why do we get treated so bad? Why y'all treat us so bad? All right, so I'm going to pull up this article I saw from NRF. So NRF is the National Retail Federation. For those who don't know what it is, they do a lot of the tracking of retail trends, retail spending, things like that. You probably see them on the news a lot during Christmas season. So Father's Day, they're expecting that there's going to be $20 billion spent this Father's Day. It's actually up. So, but I wanted to look at this, right? Because I don't think people really think about just how much money is spent during these holiday seasons, right? And a lot of them are really man-made, manufactured holidays, even Father's Day, right? They're really days that big corporations entice you, encourage you to spend money. And so right here, hopefully y'all can see that. Right here is a chart, and I'm going to do my best to speak this out because I know my folks on IG can't see this, and everybody that's listening to the podcast replay won't be able to hear this or won't be able to look at it. But this talks about the top 10 consumer spending events in America. All right, so we're looking at a Super Bowl. So on average, your typical consumer spent in 2020 for the Super Bowl $86.65. In 2020, they spent $92.12 on Halloween. For graduations, they spent $112.30 in 2012. Father's Day, $148.58. I know some of my dads out there probably shaking their heads, scratching their head. They like them drawers, them socks, and them ties did not cost no stinking $148. They like, no way. But listen, that's the average. So if you understand statistics and averages, you know that sometimes when the people that spend a little bit of people that spend a whole lot of money pulls the average up. Because we know mom gets everything on Mother's Day. All right. Valentine's Day, average spent $196.31. All right. Easter, $151.25. Dag, Easter beats out Father's Day. Dag. Mother's Day, $204.74. $204.74. Now they got on here back to school. It's an event. It's definitely an economic event, right? It's $789.49. I think we're going to see back to school spending spike up pretty high this year when the numbers come out, just because of COVID. A lot of people can't fit the stuff that they were wearing before. And, now there's going to be a lot of back to school spending. All right. Winter holidays. So we don't call them Christmas anymore. We just call them winter holidays. $997.79. Again, $997.79 is what your average American consumer spend on winter holidays. All right, and then back to college, $1,059.20. Now, that's easy to tell why that's so high, because sometimes going back to college, it involves getting a U-Haul truck, moving, all kinds of stuff. But listen, dads really get the short end of the stick. Hopefully, y'all let me know, what are y'all getting y'all dads for Father's Day? Do y'all have something planned for him? Something nice? For those of y'all, who still have their fathers with them, my condolences to everyone who's lost their father. But man, dads get a bad rep. Why is that? I mean, Halloween is people spend more money almost as much on Halloween than they spend on Father's Day. And they spend more money on Easter. Go figure. But listen, do me a favor. For all of y'all who still got y'all dads, make sure y'all treat them good. Get him something good. Don't get him no holy socks. Don't get him no holy drawers. And don't get him no whack ties, y'all. Get him something nice. Get him something he gonna like. Now, all the dads in the world, we just smile and grin when we get all those things, because we appreciate that. We were at least thought about, because we know Chris Rock said it a long time ago. Dads can't even get the big piece of chicken. But treat dad good. Treat dad good. All right, JCW, MKW, how are you? Welcome. Who else has questions? I see Jose put something in the chat. What would be the proper percentage ratio for a diversified portfolio? That depends. I'm going to read that again. Jose asks, what would be the proper percentage ratio for a diversified portfolio? So I'm assuming you're asking, what should each holding in a portfolio be? What should the percentage weighting in the portfolio be? Is that what you're asking me, Jose? Just so we're clear. Hey, how you doing? Miss Edith is in the building. All right, I'm waiting for Jose to come back. Hopefully he's still here. All right, so yes, society places more emphasis on mothers versus fathers. That's true. That is true. All right, so Jose, that's a trick question, right? Because a lot of people invest, right? Everybody preaches index investing. And so we're just looking at the S&P 500. And it's funny, I got a video that I meant to show, but it just shows the different weightings of each industry and each sector that's inside of the S&P 500. All the stocks have different weightings, though. They all have different weightings inside of that index, inside of that ETF that follows that index, inside of that mutual fund that follows that index. So they're all different. I'm gonna tell you what I used to do when I was institutional. I would start off, I would have an entry of buying no more than 2% of my position. Now, I had millions of dollars. I worked at a firm that was a little under $1 billion in management at the time. But in my portfolio, when I would start to build a position, I wouldn't exceed a 2% limit. And I wouldn't exceed a 10% limit. Now, again, on my initial buy, I would not exceed 2%. That was my discipline, right? And then if I really, really liked it, I would build up to 10%. And I wouldn't hold more than 15 positions at any given time in my portfolio. Now, mind you, this was 10 years ago? This was 9 years, something like that. And it was a portfolio of all ETFs. So I was managing a portfolio of all ETFs. But I think you have to figure out what you want your asset allocation to be first, then back in to what you want your individual exposure to be. Because position holdings, right, it's a form of risk management. So you're saying, so for example, let's say there's some people that might have 5% weighting, right, and a maximum of 20 positions. And their goal is to get 5%. The max number of holdings is 20. To me, I think having 20 positions in a portfolio is way too much. You're never really going to be able to follow them in the way that you need to understand them. Now, if they're all index funds / ETFs, and you say, I just like this industry and I want to rock with that, that's cool. But there's not even 20 sectors, right? Yes, we can get into all the subsectors and things like that, but for your average person, that might be overkill. That might be overkill. So again, you could take 5%, right? That could be your max holding amount. That's your highest percentage. You could say, I only want to have 10% or 10 holdings in my portfolio, right? Because again, going back to 5 gives you 20 slots at 5%. Each slot equal to 5%. If you got 10, you're doing 10%. You got 10 slots that are 10%. You could do that. Question would be, can you afford to lose 10%? So let's say it's a $100,000 portfolio and you're going to put 10% into it. So you have at least $10,000 exposed to potential risk at any given time. And we're just doing simple math and numbers for this exercise, y'all. Can you afford to lose 10 grand? Right? You got to ask yourself that question, because again, at any given time, any security can go to zero. We've seen it happen. Look at what happened with gold. Look at what happened with the flash crashes. Look at what happened with the instant crash we had last February and March. The question is, will you need to pull that money out at that time? Will you need it to live on? So again, it takes a little bit of forethought, but it's not hard. It's not rocket science. It's not rocket science at all. Finding yourself. I'm good. Miss Edith, did you see that my podcast was awarded top 20 status of all Black Wealth podcasts? Right. So I was ranked number 11 out of 55 podcasts that are out there. So I'm feeling good. I'm feeling great. All right. Jose, let me know if I answered your question. And I know I was supposed to talk about escort benefits as well. Escort benefits are a little tricky. I'm not sure Karam is still on. But escort benefits are a little tricky, right? So the reason why people go to escorts is to save money, typically on self-employment tax. Now, when you are an escort or subchapter S or a small corporation, many people use it, again, to save money on taxes, right? But there's some things you have to do in exchange for that. One of the things you got to do is keep corporate minutes. All of these things are important in a court of law, and I'm not a lawyer. Right. The other thing the IRS wants you to do is to take a reasonable salary if you're profitable. So I've seen a lot of people out here promote the use of S corps in real estate. I'm not really on that bandwagon, but it depends, and each state is going to be different. Again, it depends, and it really depends. Each state is going to be different. All right, y'all. Any more questions y'all might have? See, a couple more people might have joined. A couple more people have joined. So it looks like Ali Blossom has joined, and Boutiques to 12 has joined. So welcome. All right, Angela says congratulations. Miss Etna says congratulations. All right, cool. Thank you for the thread. All right, cool. So you got what I was talking about. All right, cool. Now I'm trying to find it again. I lost it. Oh, there it is. Because I want to show it off again. For those who are just now joining. I'm Kamari Ellis. This is Wealthy Wednesdays. What's up, Trey? DV Brown, how are you? All right, so I'm putting this up one more time, just so we can talk about it. All right, so again, for everybody that got here late, like I can talk because I got here late myself. But again, I was awarded number 11 out of the top 50. Well, One says 50, the other one says 55. Let's see. Let's put it to the test. But I got the ranking of number 11 out of the top 50 Black Wealth and Investing podcasts to follow in 2021. So let's see. Is it 50 or is it 55? Let's see. I only see 48. Maybe there's another page. Nope. So, okay. And I'm not sure how they did the rankings, but I'll take it. Listen, I'm on a post with Tiffany Elise Brown. One of my favorites. Miss J 25, how are you? One of my favorites. So I'll take it. Again, I'm in the esteemed crew now. Journey to Launch, EYL, Paychecks and Balances, the Black Wealth Renaissance. This is dope stuff. Dope stuff. So that's what I'm happy about. That is what I am happy about today. All right. So any other questions before we wrap up? Last call. Right, Jose? Yes. Mama, I made it. Didn't make it yet. I got to get a check. I'll take the accolades, but the checks are better. All right, Trey, how do I feel about meme stocks? I think meme stocks suck. I think it's a fad or a phase, whichever one you want to go through. People can make some money. People have made some money. People have lost some money. Here's the thing. You have to figure out what you want to be. And I kind of talk about this all the time. So most people don't know what they want to be. What do I mean by that? A lot of times people don't know who they are. Thus, they don't know what kind of investor they want to be either. So you got to ask yourself, do you want to be an investor or do you want to be a trader? Both are fine. Both are cool. But they are different. And you have to approach them in a different fashion. Warren Buffett is an investor. Right? He's buying forever. He's buying for the long haul. He's not worried about these short blips in the marketplace. Now, some people are saying that old Warren is washed up. That's cool. They said the same thing about Warren in 1989. Now, he is a lot older. Right? But that's on one side. You want to be an investor. Or do you want to be a trader? Traders are looking to get in, make some profit, and get going in a short period of time. The meme stocks are good for traders. The investments are not. So it's like, I'm a married guy, right? So it's like, all right, cool, I'm married for the long haul. I'm an investor for the long haul in this relationship. Am I blind? No. Do I still think there's beautiful women out here? Hell yes. Right? I'm still a human being, but I made a commitment to this thing over here. This thing that pays me dividends. That thing called marriage. So it probably wouldn't be a good idea for me to try to run after every hot girl that I see or every hot stock that I see, because then it takes away from the commitment, the investment, the marriage. Now I'm using marriage as an analogy for investing. I think it's a good one. Y'all tell me, is it good or is it bad? But you have to decide what you want to do. By the way, there's nothing wrong with being married. There's nothing wrong with being single. Both probably think each side, the grass is greener, right? Because each one of them has its benefits. Each one of them has its cons, right? But again, you got to figure out what you want to be. So again, for this show and my overall perspective, I could trade meme stocks if I had time. I don't really have time right now. But for the long haul, I'm not going to buy them because why? I've looked at the pricing history of them. Jose brought up right now, Urban One is up. That sucker was $5 a couple months ago. What made it go up to 17 is up to 17 now. Nobody knows. Did they sign new contracts? Did they do anything spectacular with their business? Because you got to remember, right, when we're buying this from an investment standpoint, stocks are part of ownership. If you're buying this, what makes it so great? What makes the business great? And again, since the stock market is an auction, right? If you ever seen auctions, car auctions, 555, give me 20, 20, 20, 30, 30, 30, 40, 40, 40. People are constantly bidding for the price. Sometimes it gets bid up. Prices get bid up for no reason, shape, or form. I was going back listening to some old episodes, and like I've touched on AMC in so many episodes. It for me, it's just like blah, blah. But I know y'all want to talk about it. So my job is to talk about the stuff y'all want to talk about. So I'm going to pull this up real quick. This is AMC. This is one of the meme stocks, right? It was on May 24th. It was $12, $12.17. Today it's like $56. Closed at $51, excuse me. I'm sorry, I messed it up. Closed at $55. So that was less than a month ago. Now, we saw other spikes, right? We go back to this spike here back in February, that January, February run. And what happened? It declined. So, the Reddit crew, the Wall Street Bets crew, they love it. AMC is able to make some money off of it. GameStop is able to make some money off of it. They've been making some smart moves. But you got to ask yourself, are more people going to the movies right now? Did they reduce expenses somehow? They weren't really doing that great before the pandemic. Same thing for GameStop. Now, GameStop, gangster move. They raised a whole bunch of money. I'm not mad at them. But are people really buying? Are people really going to the stores and buying more games, consoles, cell phones, trading in cell phones? I want to say they just reported, because I didn't prepare for that, but I think GameStop just reported, and I believe they had a loss. So, I just, yeah. Again, if you want to trade, get at it. Get at it slow. Learn some discipline, because you're going to lose some money. And I don't say that to be flippant or anything else. I say it because it's true. I've lost money. If you ain't never losing no money, you ain't really trying. All right, so traders lose over the long term, whereas investors win over the long term. True. You know what? I saw a clip. I know I told you earlier, like EYL's on that same list as me. Ian Dunlap hosts the Market Mondays with them, right? Ian put out a clip where he said this on EYL last night. He said, hold stock if you want generational wealth. What would it be like if you bought Apple 20 years ago, 30 years ago? What would that make your life look like today? A lot of people can't think that far ahead. And I actually hate doing this, but let's do it. Let's do it. Trey, I see you got a question. Give me a second. I'll come right back to it. All right, so this is Apple. This is Apple. This is a monthly chart. All right, these are candlesticks. Each one of them summarizes a month worth of data. So a month worth of opens, close, highs, and lows. Now, back in, I said 20 years ago, so 20 years from now, 20 years from today would be 01. Oh, 20 years from today would be 2020. 20 years from today would be 2021. 20 years from today would be 2022. 20 years from today would be 2023. 20 years from today would be 2024. 20 years from today would be 2025. 20 years from today would be 2026. 20 years from today would be 2027. 20 years from today would be 2028. 20 years from today would be 2029. 20 years from today would be 2030. 20 years from today would be 2031. 20 years from today would be 2032. 20 years from today would be 2033. 20 years from today would be 2034. 20 years from today would be 2035. 20 years from today would be 2036. 20 years from today would be 2037. 20 years from today would be 2038. 20 years from today would be 2039. 20 years from today would be 2040. 20 years from today would be 2041. 20 years from today would be 2042. 20 years from today would be 2043. 20 years So October 1st, let's see. Can we go back any further? Yep. Let's see. So can I get June 01? Mind you, June 01 is just a couple months before September 11th. But Apple was trading at $6 back then. Now, I know some of the charts get changed because of dividend splits and things like that. But it was $6 just using the chart. Apple right now is 130-ish dollars. 100 and close at $131. So what would your like look like? How many folds has that investment grown? What's the ROI on that? I mean, that's just one. So if you hold one for one generation, one stock for one generation, then you can pass it on to the next generation. By the way, it gets great tax benefits when you're transferring a stock from one person to another, from one family member to another. So one of the best analogies. Okay, I'm glad you enjoyed it. All right, D. Charles says, I think it went up as a part of Juneteenth bull trap. Maybe. That happened last year too, where all the quote unquote black stock companies went up. D. Charles was talking about Urban One. All right, so Trey, I know you asking questions. I see we got a couple people on. Hey Evelyn, how you doing? Alon, how are you? Cap Risky, Mac, how are you? Jamar, if I'm saying our names wrong, I apologize. Leo Ladies in the building. DJ Flexing's in the building. All right, so Trey also asked me about, I've seen this before. I know I've looked this up before. Clean energy fuels. Oh, that got spiked up too. So give me 1 second, y'all. I am looking at ticker symbol KLNE, Clean Energy Fuel Cells. I believe they do something with hydro or lithium batteries. They do something with batteries. Let me look real quick. So Trey is asking about them. Give me 1 second. $10.71, $2 billion company. Let's see. Clean Energy Cell Fuels. Clean Energy Fuels Corp provides natural gas as an alternative fuel for vehicle fleets. I got that wrong. It's fuel, but not in the way I was talking about it. And related fueling solutions, primarily in the United States and Canada. That's sexy. Now, why do y'all think I said that's sexy? And they're in and out of profitability. They might have got hit hard during COVID. I think it's interesting. I would definitely dig a little deeper on this. I think alternative energies are going to be a good play in the future. Like I said, for anybody that's watching, this is not a recommendation to buy or to sell. You always have to do your homework. Always have to do your homework. They got some money in the bank. So I would look into this. Now, Trey, are you looking to trade this or invest in it? Courtney, the IV investor, I just talked about you earlier. We had the whole LLC talk, Courtney. for real estate purposes. So Trey, are you looking to buy this? Are you looking to flip this? Well, when I say buy it, are you looking to invest in this for the long haul, or are you looking to trade it? Which one? If you're still on. So I think it's an interesting play. I would need more information on it. So when I look at a company, I'd like to know where their revenue comes from, what their debts are. But this is definitely one I would put on a list and evaluate deeper. Definitely. Alpreneur, how are you? Kira Loving Life, how are you? Welcome, welcome, welcome. All right, so going back to D. Charles, he says, I think it went up as a part of the Juneteenth bull trap. Yep, and shout out to Congress, House of Reps, and Senate. Looks like Juneteenth is going to be a national holiday. I think that's pretty dope. Still a lot more work to do, though. It's not the end of the road. But let's look at some more black-owned stocks, because I was supposed to be getting out of here. I still ain't ate. I got to get some vittles. But real quick, U1, which name I spelled wrong. Let's pull that up. Again, my apologies to everybody that's on IG. Hopefully, I am explaining it clearly. Everyone that's listening to the podcast replay. So again, Urban One, again, company started by Kathy Hughes. It was up $17 a day. Looks like it started jumping on June 1st. Let me back that up. Sorry, looks like it started to run May 19th, May 20th. Yeah, I was looking at the wrong chart. So that's interesting. What's another black-owned company? Jose, what's another one of the companies we looked at? Carver, I believe Carver's one. Carver jumped too. Interesting. Maybe it is a Juneteenth bull trap. That might be a whole thing, the Juneteenth bull trap. Beware of the Juneteenth bull trap. Because when I go back a year, June 17th, we had a nice little run in Carver. Then it spiked on the 17th. Excuse me, June 16th, we started to get a run. Then it spiked. It gapped up. When I say it gapped up, it means it jumped in price significantly. It jumped in price. Went up and then it fell. Interesting. Same stuff. I tell you, boy, they say history doesn't repeat itself, but it does. All right, what is, Jose, help me out. What's some others? I know we had Carver. I know we had U1. I think there was another bank. Yeah, these people are taking out money at all angles. You are right about that. And that, I wonder if this continues to be a thing. And again, everybody was like, well, a great way to help black businesses is by buying a stock. It really isn't, right? Because when you're buying a stock, you have to think about it as an investment. 9 times out of 10, the company's not going to get the money because the shares are trading in the secondary market. So what does that mean? So you have your primary market, which is when you have your IPO, right? That's when the monies go from the company, right, to the public. So then the company gets what they call an equity event or a cash event. So that the company gets the money. All the while the money is floating in the secondary market, for the most part, it does not benefit the company. Now, Here's a great, relevant, lifetime, or not lifetime, current day event example. GameStop. GameStop did an additional stock offering and they raised a little under $500 million. That went to the company because that stock sold directly from the company. So when we talk about black business, black bank, we need to understand the flow of money. We need to know where it came and where it went to. And this isn't helping at all. So Jose is asking me to look up AMS. All right, so hold on. Ian recommended this book Monday, Poor Charles Almanac Expanded. Yeah. The Wit and Wisdom of yeah. Munger's the man. I talk about Munger a lot. I haven't read it. I don't read a whole lot of finance books. I was a finance major, so it's hard for me to get into them. It has pictures. I'll check it out though. Do I know any publicly traded companies with an option chain? I mean, there's a lot of companies out there with an option chain. I mean, an option chain is just the listing of all the options that are out there. So now, yeah, I know why Jose wants to see this one. All right, I'll share this one too. All right, this is AMS, American Shared Hospitality Services. We talked about this one when we went through, when we did our review of the I think it was 4 or 5 black stock companies. American Shared Hospital Services is definitely interesting. It's a penny stock. I don't mess with penny stocks. Penny stocks, in my opinion, are the spawns of the devil. But it's had a nice little run. Got a little jump here. Looks like it's back. But it seems like it can't get its footing. And I think this is the company that Jose said was paying a dividend. Now it's a medical and nursing services building. Oh, sorry, D. Charles. My bad, bro. I'm assuming, matter of fact, I'm assuming you're a man, but you could be a woman. I shouldn't assume just by saying D. Charles, right? But I don't know. I think maybe not Radio One, Urban One might have options, but I'm not sure. I'm not sure. Actually, that's a damn good question. I should know that. Okay, you say because of how money works. Okay, all right. Now I keep seeing my picture jump, so I apologize because I got a new camera. The quality of the picture looks a little better, but it keeps jumping, so I got to figure it out. So I apologize to everybody that's watching. I keep seeing the picture jump because I keep seeing it jump, and it's like, what is this thing here? Why does it keep doing this? All right, I see a couple people also joined. I don't know how to say that name. AUJA Saab. Forgive me. If you could phonetically put that in the chat, I will say it right. I don't want to mess it up. Realtor Sean, how you doing? B. Dunham, how are you? Welcome, welcome, welcome. All right, yes. The color of How Money Works is a dope book. How Money Works is definitely a dope book. All right, I posted a correction. They do not pay it. Okay, they don't pay a 13-cent dividend. Okay. Yeah, but it's still a penny stock. I'm not into penny stocks at all. At all. They don't make sense to me. Because usually you are a penny stock because you don't have the financial wherewithal and the business coming in to make you a real going concern. That's why you're a penny stock. Now, there are times where some companies fall into penny stock area. Again, a penny stock is any stock that is less than $5, $5 or less. However, when you stay there for a prolonged period of time, 9 times out of 10, you're trash. And penny stocks, again, are prone to pump and dump schemes. Basically, where you get a whole bunch of people that pump up the stock because penny stocks usually don't have a whole lot of volume. So anytime you just buy a little bit of it, it jumps in value. Does that sound familiar to anybody? Does that sound familiar to anybody? But you buy a little bit of it and it jumps. Then people get excited about it. The media might pick it up and then it might jump some more. And then once the promoters of this pump and dump get their money, they then say, we're done. We're taking profits and we're leaving. Hi, son. My son is going to take a business and personal finance class his first year in high school. Kind of excited about that. Stonks. They tease me about stocks. All these memes, they say stonks. If y'all seen the meme, hopefully y'all have. All right, but listen, if there are no other questions, I'm going to go ahead and get out of here. We will be back. I am up in the air about having a show on Saturday. I will let you know. I'm thinking about making some changes and some things. And so I'm not sure about Saturday. I'm still going to be doing Saturday shows, still going to be doing Wednesday shows, but thinking about changing direction to a certain degree. But listen, if you want to catch up with me, I'm easy to find, right? You can always go on Facebook and pull up the Finance Rebel Academy, the Finance Rebel Academy. I try to do a good job in there of talking about economics, stocks, insurance, money overall on a daily basis. Also, you can always text me, right? You can text me at 215-974-0058. Again, 215-974-0058. All right, everybody. I appreciate everyone here. This is the Finance Rebel Show. Listen, y'all, keep learning, keep striving, and keep pushing to be great. We all can be great. And when you don't push to be great, you've fallen short of the glory of God, y'all. So keep pushing. And I'll see y'all next time. Have a great week. Bye-bye.